Hello everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 4th of December 2020. I am expecting for oil the upward trend to continue. The first big second wave correction was a lot more shallow than expected. That didn't follow typical behaviour for this market, but the structure is complete. I have two mid to longer term targets. The first target at 87.90 for a more time consuming consolidation or pullback to arrive, and then the next target at 121.43 for an even bigger consolidation or pullback to arrive. I expect that low in April this year for oil to remain intact. I expect it's in a new huge bull market. For a long time I had a very bearish wave count for oil, and now that structure is complete. It was a big double zigzag that I'm labelling Super Cycle Wave 2. The structure of the double zigzag, here's the first zigzag in the double, it's labelled Cycle Wave W. The double is joined by a 3 in the opposite direction labelled X, which subdivides as a zigzag, and that's the most common structure for X waves. And then the second zigzag in the double is complete down here, and it's labelled Cycle Wave Y. This is a corrective structure in Elliott Wave terms, so for the bigger picture, a correction moves against the larger trend. And so the larger trend for oil, which looks like it has resumed, for this count is upward. The next upward Elliott wave structure is, I am expecting, going to be a simple 5-wave impulse, and I'm going to label it Super Cycle Wave 3. That's the only allowable structure for a third wave. At cycle degree, I expect it will label 1, 2, 3, 4, 5, and it has to meet all of the core Elliott wave rules for that structure. Those core rules, just very briefly: 2 may not move beyond the start of 1, 3 must move beyond the end of 1, and it has to move far enough above 1 to then allow 4 to unfold and remain above 1 price territory, and then 5 must unfold. A guideline is 5 usually moves beyond the end of 3 to avoid a truncation, and the last rule, 3 may not be the shortest out of 1, 3 and 5. For oil, 3 is usually longer than 1, and 5 can be a particularly long and strong extension. Super Cycle Wave 3 also has to meet those rules in relation to Super Cycle 1. Super Cycle 3 must move beyond the end of 1, and it has to move far enough above the end of 1 to then allow Super Cycle 4 to unfold and remain above Wave 1 price territory. So I don't have a target for you for Super Cycle 3, and I won't calculate it until Cycle 3 and 4 are complete, and I can apply Fibonacci ratios between 1, 3 and 5 to calculate that target for you. 2 may not move beyond the start of 1. I expect this low at 10.24 to remain intact. Let's look at the weekly chart now. We this low down here is this point down here. Here's cycle 1. Cycle 2 could be complete. I have 2 daily charts, or I have 3 actually, but I have 2 different ways of looking at this movement. The first will follow this labelling here on the weekly chart, and then the second will move it down 1 degree and consider the possibility that cycle 2 might not have been over here and could be continuing further as an expanded flat correction. And if it is continuing, then technically the invalidation point for it is all the way back down here at 10.24. My main chart expects, or my main daily chart expects, that cycle 2 is over here and cycle 3 is in its early stages. It's moved beyond the end of 1, but it has to move further to allow room for cycle 4 to unfold and remain above Wave 1 price territory. Here's a nice example of that 5-wave impulse. It's in the opposite direction, but the structure is the same. 1, 2, 3, 4, 5. 4 can't move into Wave 1 price territory, and it usually doesn't get anywhere near it. And so I'm expecting a huge upward movement for cycle 3, and then another pullback or consolidation to last months, probably, for cycle 4. Let's look now at the first daily chart. We're going to look at the structure here of cycle 2 from the high here. I've labelled cycle 1. Cycle 2 here is labelled as a zigzag, A, B, C, subdividing 5, 3, 5. Primary B within it is labelled double zigzag W, X, Y. If cycle 2 is over there, then cycle 3 may have begun, and within it I expect primary 1 is incomplete, with at intermediate degree 1, 2, 3, 4, 5. I've drawn a best fit channel around this upward movement. While price remains within this channel, assume upward movement will most likely continue. If intermediate 4 breaks below the lower edge of that channel, then we'll have to redraw it using Elliott's second technique probably. I would expect intermediate 4 to probably remain above the low labelled minor wave 4 here and to be relatively shallow but last a few days. And then intermediate 5 should move beyond the end of 3. When I know where intermediate 4 has ended, then I will know where intermediate 5 may have begun, and then I can apply Fibonacci ratios between intermediate 1, 3 and 5 to calculate a target for intermediate 5 to end. The most common Fibonacci ratio for a fifth wave is for it to reach equality in length with its counterpart first wave. So this is the length I will be expecting for the upcoming intermediate wave 5. But first, a little pullback or consolidation may unfold next week for intermediate 4, or it's also quite entirely possible that minor 5 to complete intermediate 3 may not be over where I've labelled it here, and it could move higher first. Let's use that channel to guide us as to when intermediate 4 may have begun. Or we'll look for a red candlestick or a candlestick reversal pattern to indicate its beginning. Intermediate 4 may not move into intermediate wave 1 price territory, and when primary 1 is over, then primary 2 may not move beyond the start of primary wave 1. Now here's a different way of looking at this more recent movement. This high here is the same point as on that first daily chart, and now I'm considering the possibility that cycle wave 2 may be an incomplete expanded flat correction labelled A, B, C, subdividing 3, 3, 5. B waves of expanded flats move beyond the start of the A wave. The common range for a B wave is from 1 to 1.38 times the length of its corresponding A wave, and here primary B is 1.38 times the length of primary A. It's right at the edge of that common length. There is no rule stating a limit for the length of a B wave within a flat. That there is a guideline in Elliott Wave that states when the B wave reaches twice the length of the A wave, the idea of a flat should be discarded based upon a very low probability. B waves should be evidenced by weakness. There should be something off or wrong about them. They should have weak volume. They should exhibit some bearish divergence. This wave count does not have support from classic technical analysis. I'm not seeing enough weakness in this upward movement to have confidence that this looks like a B wave. Primary wave B itself is also an expanded flat, subdividing 3, 3, 5, labelled A, B, C. So that's a good example of what they look like. I'm expecting an expanded flat for cycle 2 for this count, but flipped over in reverse. The target is for primary C to reach down to the 0.618 Fibonacci ratio of cycle 1 at 23.05, and primary C would be very likely to at least move slightly below the end of primary A to avoid a truncation. Note, it doesn't have to move below the end of intermediate B to avoid a truncation. The concept of truncation applies to where C ends in relation to A, not to any price extreme of B just before it. That's an important distinction for you. Alternatively, we can move the degree of labelling within the whole bull market so far for oil all down 1 degree. Cycle 1 may be incomplete. This could be primary 1 and 2 and primary 3 unfolding. Everything about this count is the same except for the degree of labelling. It's 1 degree lower than that first daily chart, and then the target is a little bit different. My first chart has a target of 2.618 and this chart has a target of 1.618. At the weekly chart level this week, a little bit of push from volume pushing price higher, a little bit of a long lower wick suggests more upward movement next week, although volume does remain quite light compared to these two previous upward weeks back here. Price is now in a really strong cluster of resistance above, so this may slow it down. We may see more pullbacks and choppiness along the way as price moves its way through resistance there. ADX is declining, telling us there's no clear trend at the weekly chart time frame, but the positive DX line has just last week crossed above the negative DX line. There's a potential change to up finally indicated. ATR is flat as price is moving mostly sideways, but now starting to move higher, and ATR is slightly declining as price moves higher. On balance volume, the last signal it gave was bullish. It's a weak bullish signal, but it is a bullish signal. On balance volume broke above resistance, giving us a weak bullish signal there. RSI is still well in neutral territory. There's still quite a lot of room for price to rise. Stochastics is entering overbought, and price is at resistance, a strong cluster of resistance. We may see pullbacks along the way. And what about the short-term picture at the daily chart level? There's a little bit of weakness here. The last two upward days from oil show a decline in volume and a decline in range, and we've got a long upper wick here. This may be a precursor for that intermediate wave 4. We may see a pullback or consolidation to relieve this slight weakness before an upward trend continues. And at the daily chart level, ADX is giving a very clear signal that there is an upward trend in place. On balance volume broke above this weak resistance line. It tested support there. It's moving up and away. That's a bullish signal. RSI is still not overbought. There's still room for upward movement to continue. ADX is still not extreme. There is room for this upward trend to continue. Stochastics is overbought, but when this market trends, it can remain extreme for quite long periods of time. It's more of a useful oscillator in a consolidating market, not particularly useful in a trending market. And MACD is full bore bullish to support the Elliott Wave count. That's all from me this week with your oil analysis. I hope all our members are staying safe and staying well.